On that note, let's bring in Kevin Green, who joins me now. Happy Friday. So we haven't got the NFP, but we have, hopefully, Kevin, got the ISM services. What are you seeing there?
So we do have ISM services that was actually just released, and unfortunately, this isn't the best print to say the least here, Sam. We actually did have the headline number coming in at 50 even, so we're still in expansionary territory. The street was looking for 51.8 when you're looking at the ISM non-manufacturing PMIs here, and that's below or moving lower than what we saw this time last month at 52. And here's the reason why it's actually a little bit of a problem or not a great report. If you're looking at ISM services prices, that came in at 69.4. Previously, it was at 69.2. So we actually are seeing prices still moving to the upside, and that's expansionary territory. Obviously, that just means that prices are rising. But when you're looking at the consumer confidence or the business activity metric, that actually came in contractionary territory at 49.9. She was looking for 51.8. New orders coming in at 50.4. So still in expansionary territory, but lower than what we saw this time last month at 56. What does this kind of show? Potentially stagflationary type of print here. Now, this is not out of the ordinary for ISM services over the last couple of months. We have seen prices rise. We have seen new orders for the most part kind of stabilize or even come in contractionary territory here. And we have seen obviously sentiment be lackluster to say the least here. We are seeing the dollar moving lower initially. Yields did initially move to the upside. You are seeing the S&P 500 actually selling off here. It did hit actually 67.40 before this report. We're sitting at around 67.25. So this is not the print that you want to see if you are a Fed member, especially with the lack of data coming from the government here. Unfortunately, this is going to be the best day that we have moving forward, and this kind of shows that maybe the inflationary picture is a little bit more concerning now than the labor market potentially cracking. Let's see how the market actually reacts to that type of dynamic.
Right, as you say, any higher read certainly would have been taken as a dollar positive, certainly with the PMIs. So that explains the moves we're seeing in the DXY right now. 50 just on the boom or bust line, as you mentioned, very much signaling that we're still in expansionary territory, but those prices paid up, new orders down. As you've been pointing out, Kevin, we do want those heading in the other direction. Just wondering, with a lack of data and an absence of job prints this week, have you got any information on the employment gauge within that ISM services PMI survey that we've just got out?
The employment gauge there for ISM services, that came in at 47.2, so contractionary territory there. The previous print was 46.5. So obviously that kind of matches what we are seeing when it comes to the ADP report, or even if you're looking at the last non-farm payroll report, where the labor market is kind of decelerating when it comes to the amount of jobs being added. It looks like the sentiment within purchasing from purchasing managers within the services space is kind of highlighting the same type of trend. I do also want to highlight, we did have the S&P global PMI that came out about 15 minutes before. That showed a little bit of a different picture. They actually saw the services, the component expanding to 54.2. She was looking for 53.9. Not as much of a heavier print, or it doesn't carry as much weight as the ISM services, but once again, kind of a mixed picture. The employment side, obviously we are seeing a deceleration. We have to be mindful of that, but we have to balance out not only the employment picture, but also the inflationary picture. Austin Goolsbee talked about that today, and he sees deterioration in both of those mandates for the Fed, which puts them in a tough bind.
Yeah, Austin Goolsbee said a couple of interesting things this morning. Okay, so we've got the employment gauge sticking in contractionary territory for now, at least. Interesting, you mentioned the S&P as well, 54.2 there. Look, we also got some Eurozone PMIs out overnight, I should say, actually picking up to an 8-month high. Obviously, we are seeing a few diverging prints depending on which country you're talking about. Obviously, some softness in places like France, given some of the political uncertainty. But just to talk us through what you're seeing there, because, you know, this is very key as that piece of the puzzle in the overall growth story globally.
Yeah, so this is the HCOB PMI data that came out for the Eurozone. The composite came in at 51.2, so expansionary territory. That's up from 51 even in August. We also saw services sector business activity index actually rising to 51.3. That's an 8-month high there. So that's also obviously positive for the market. When you're looking at the individual countries, Germany, their composite, once again, showing actually some pretty decent strength. Spain as well, but France is the only major economy that's still in contractionary territory that came in at 48.1. So I would say you are seeing some optimism there when it comes to that data set. Now, if we're talking about the UK and the S&P global PMIs for the UK, a little bit of a different story. They have been actually showing some relative strength in Q3, but we did see that actually starting to decelerate here for the last month of Q3 here. Services PMI for the UK came in at 50.8, down from 54.2. So that's a sharp decline there. The composite PMI for the UK coming in at 50.1. Previously in August, that was actually at 53.5. And you are starting to see a deceleration and some weakness when it comes to consumer confidence, employment, as well as ordering activity or business activity for the UK. So I would say mixed picture overseas, but you have seen some pretty decent price action in these stock markets, not only when you're looking at European stock markets, but also in the Asia Pacific markets with the Nikkei continuing to make higher highs here. So global markets for the most part, global economies are holding up. I would say there's still probably some rolling recessions that are there. And I think the big focus is what's happening here in the United States. And with the lack of data, it makes it kind of hard to see what the trajectory is going to be for the latter half of this year going into 2026.
I mean, as we've been talking about all week, KG, the US investors don't seem to be too worried about that. I mean, it very much looks like the bulls came out on top this week. And as you mentioned, perhaps what we've seen as far as a reflection in global markets, this has really been driven by an underlying AI narrative. You know, we've had all these tie-ups from South Korea to Japan with OpenAI, etc. We've also got these rate-cutting expectations still being priced into the market almost at 100%, thinking that this is really a done deal. And then you've got this sort of thinking that we're going to see this continued earnings strength. So I'm just wondering, you know, as far as the price action out there today and the reaction we're seeing day 3 of this government shutdown, day 3 of the fourth quarter, what really stands out to you at the moment?
Well, it does appear that defensive sectors outside of technology and semiconductors continue to take the lead here. I think that actually is very notable. Now, what makes this kind of difficult, Sam, is the first week of Q4. So you still have institutions rotating their portfolios, trying to rebalance, trying to get maybe into some value plays here. So that could be a tailwind for some of these defensive sectors. And then you're talking about supply constraints for some key areas of the market that continue to outperform. Artificial intelligence, the data build out, the data center build out that is there. Obviously, that has continued to expand when it comes to market cap and putting pressure to the upside for the S&P 500. We're talking about power generation. Once again, a supply-constrained market industry for the most part. Dollars are going in as far as investments, pushing prices higher. You even have the metal space and rare earth metals and minerals and things of that nature. Supply shortages, obviously influence from the government here in the United States, pushing prices higher. It seems like as an investor, you got to continue to find those themes in order to really try to outperform this market. And I think that's actually what's provided us some strength this week.
Oh, no doubt about it. I mean, you know, healthcare is also once again up today. And I actually heard an interesting tidbit that these stocks do typically outperform, particularly as you look at a sort of midterm year as well. So we are certainly starting to see some of that this week with some of the deals that have been announced. Kevin Green, thank you so much for getting us across that key data and your thoughts on the market this morning.